Lock in right now because a massive warning shot was just fired in the global financial system, and almost nobody is talking about it. The repo rate in the United States just spiked to 6%, and in Singapore, overnight rates hit a staggering 11%. If those numbers don't scare you, they should. This isn't just a glitch. This is the plumbing of the global banking system clogging up in real time. The primary dealers, the massive banks responsible for keeping the system liquid, are being cornered. They are running out of balance sheet space, they are refusing to take on more debt, and we are witnessing the early stages of a liquidity crisis that could make 2008 look like a dress rehearsal. Here is the reality the news won't tell you. The U.S. national debt just crossed $36 trillion. We are now spending more than $1 trillion a year just on interest payments. That is more than the entire defense budget. The government is in a debt spiral, and they have only two choices: default or inflate. Default is impossible, so they will choose inflation. This is called financial repression. They need to keep interest rates below the rate of inflation to burn away the real value of the debt. That means your savings, your bonds, and your cash are being quietly destroyed by negative real interest rates. History proves this happens every time. Look at 1933. FDR confiscated gold and devalued the dollar by 69% overnight to wipe out debt. Look at the 1970s. We had stagflation and a liquidity crisis exactly like we are seeing now. The dollar lost half its value, but gold went from $35 to over $800. The people who trusted the system got crushed. The people who held hard assets made generational wealth. We are seeing the exact same pattern today. The repo market spike is the canary in the coal mine. It means there is a shortage of cash and the Fed is losing control. This is why central banks in China, Russia, and India are buying gold at a record pace. They aren't buying it because it's shiny. They are buying it because they know the dollar system is unsustainable. So how do you protect yourself? You need to look at asymmetric investments, assets with limited downside but exponential upside. First, gold. Adjusted for money printing, gold should be well over $3,000 an ounce. Second, silver. This is the explosive play. It is both a monetary metal and an industrial necessity for green energy. We are running structural deficits in silver, yet it is trading at a historically cheap ratio compared to gold. If that ratio normalizes, we could see silver hit $80 an ounce. And third, deep value commodities and mining stocks. These sectors have been starved of capital for a decade, and when prices run, these companies become cash flow machines. Don't leave your wealth in a system that is designed to inflate it away. If you have more than 70% of your net worth in paper assets like stocks and bonds, you are overexposed. You need to rebalance. Get 10 to 20% into physical gold and silver, actual metal, not paper. Build a cash reserve and short-term treasury bills for liquidity. And educate yourself on financial repression. The signals are flashing red. The dealers are cornered. The greatest wealth transfer in modern history is starting, and you need to be positioned before the panic sets in. Do you think the Fed can stop this without printing trillions more? Let me know in the comments. And if you want to stay ahead of the curve, smash that follow button right now.